The macro shift, dollar dominance, and JPY vulnerability. The global currency markets are witnessing a powerful resurgence in the United States dollar, while the Japanese yen remains under intense selling pressure. Investors are aggressively piling into the greenback ahead of a massive wave of top-tier economic data, creating a stark divergence in the FX space. As the yen continues to weaken against the greenback, trading desks are closely monitoring key psychological levels for potential intervention or structural reversals. This strong dollar environment is setting a highly restrictive backdrop for international assets, forcing macro traders to reposition their capital ahead of the upcoming New York sessions. Eurozone inflation, the HICP rate warning. All eyes in the European session are turning toward the Eurozone's preliminary harmonized index of consumer prices HICP rate. For June, the market is bracing for a potential wider-than-expected easing of inflationary pressures across the Eurobloc. If the inflation data prints softer than anticipated, it will give the European Central Bank significant leeway to consider a more dovish policy path. Such a development is highly likely to weigh heavily on the common currency, sparking fresh bearish momentum for euro pairs as yield differentials shift in favor of the dollar. U.S. labor market and manufacturing activity. The upcoming American sessions are loaded with high-impact economic triggers, starting with the release of the U.S. employment data for June. This serves as a critical prelude to the official non-farm payrolls report tomorrow, making today's numbers vital for gauging the underlying strength of the U.S. labor market. In addition to the employment figures, Wall Street will be hyper-focused on the U.S. ISM manufacturing PMI release. Traders are looking for definitive signs of expansion or contraction in economic activity, which will directly influence the Federal Reserve's next interest rate calculations. Crude oil stabilization and Middle East geopolitics. In the commodities complex, crude oil prices are showing strong signs of stabilization, hesitating to drop materially lower after recent pullbacks. On a fundamental level, developments in the Middle East remain the absolute key driver for the energy markets. Any concrete progress toward a normalization of the geopolitical situation in the region is expected to exercise immediate downward pressure on oil prices, unwinding the remaining risk premium. Until a definitive resolution is reached, energy traders should expect ongoing volatility and tight consolidation ranges. I noticed you're putting together a comprehensive video script covering the Eurozone HICP rate and the upcoming US employment reports. Delivering high-density financial analysis under tight market deadlines requires an immense amount of mental focus and sustained energy to help support your daily stamina and focus during intense trading weeks. We can build a customized wellness blueprint tailored around your busy production schedule, or you can choose to skip this entirely.